Hey everybody, this is Jose here. We're about to start in like 15 seconds or so. It'd be good before we start, as we always do, that you guys just say hi to all of us on the comments box. Just a quick message to say hi. That would be a confirmation for me to know that you hear me. Very good. Wonderful, guys. Wonderful, wonderful. Happy Sunday, everyone. Today we have a super important session in front of us, okay? So we're gonna get started right now, as I just got confirmation that you guys hear me well, see me well, etc., etc. So let's begin. Okay, guys, let's begin, guys. 14th of April 2019. Today is a sharpening day. Welcome to the session, my friends. My name is Jose Blasco. I'll be your guide. AutoUFOs get together. What does that mean? It means that we're gonna spend anywhere between 1 to 2 hours. I think it's gonna be closer to 2 than 1, but we'll see. We'll spend a couple of hours, close to a couple of hours together, sharpening our skills. We started last week getting into adding precision and rules to our short-term trading. And it was just the beginning of the very, very beginning. And today I'm super excited because we're gonna start diving deeper into understanding certain things that are quite advanced. Okay, guys, so be ready for asking questions. We had a deal last time. We agreed that we were going to work on this as a team, meaning that, you know, when I had questions for you, you would give me those answers, and when you had questions for me, I would give you those answers, right? And the idea is to work in a way that is interactive. So you know, I would like everybody to put your cell phones, etc., away, so you can have all the focus on the session, because again, it's gonna be more advanced today. Okay. Very, very nice of you guys with your comments. Thank you so much, Buna. Mario, good to see you. Karen, Sandy, everybody, guys, a pleasure. Okay. Anyway, before we start, we always need to go over a disclaimer, so I'll read it quickly. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. And as a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okay? Good. Anyway, magic. Here is TradeStation. Here are the beautiful UFOs ready for us. Of course, today is Sunday, so the market is closed. So we don't expect any movement in the markets. And that's why we're getting together to sharpen our skills. So just to have a little bit of a context, okay, and we are all in the same page, I wanted to go back to the Word document that we started putting together. And I remember when we concluded last week, I sent you home with a very simple piece of homework, and therefore I would like to start the session today, you know, confirming that you got that homework done, and we can agree on a name for Rule 1. Do you guys remember that? Okay, last time we talked about, okay, Rule 1, and I just gave you this long paragraph of what is Rule 1, and the idea is to summarize it in one word or a couple of words. And the idea was that before we even start planning on a trade, we need to identify what is the most probable side for us to be. Should you be long? Should you be short? Even before you start planning the trade, right? Because we talked about this concept where many times traders just plan a trade out of whatever information they saw on their chart, but they didn't ask themselves the question, should I be long? Should I be short? So they have a trade in front of them, and they may get long with a trade that in the theory world looks good, but in the real world, maybe you are trading in the opposite side of the market, okay? And then, you know, it's either the trade only bounces just for, let's say, a 1-to-1 or some very, very minor profit, and then moves against you all the way. And, you know, we agreed that this is something that happens very often, especially in the beginning part of learning journey, when someone is learning how to trade. And therefore, to avoid those problems, stack odds in our favor, but not only that, also increase the size of our profits when we're right. You want to make sure you are in the right side of the market. Okay, so one way to look at that was to look at the trend. But of course, I'm not going to repeat myself because it's recorded from the last week. But we had a long conversation about what is trend and what is not trend, and how to assess the trend, and why we look at the trend. And why the trend could be important, and we talked about because the trend tend to last, and you know, so you may remember all of that. Does that make sense? So the idea would be to come up with a name for that paragraph. Okay, and I will let you guys type what are your suggestions, because you know I was counting on you. I'm counting on you 100%. That was the deal. Teamwork, remember? And I'm counting on you to come up with, you know, a nice, you know, easy to remember word, you know, to summarize all this rule, where I spent like close to an hour to explain why we have this rule. So we want one word for that. Okay, that would be the idea. Okay, Orlando, how are you, my friend? I see you typing on the comments box. By the way, Orlando, I will take your suggestion today. So we'll do in like a 1 hour time, more or less. We'll do a 5-minute break. Okay, so I'll remember that. Okay, and if I get distracted, because you know I love this, so you guys go ahead and give me a little reminder of that. Okay, and we'll have a quick break in the middle of the session. Okay, so a few suggestions. Okay, I'm just gonna type it. Okay, and then later on we will look into it. Orlando is suggesting the view, Mario surf the trend. So I'm just gonna write it down, because we don't need to take a decision just like now. Okay, but at least, you know, having all those different definitions and way on how you individually phrase it kind of give us a way on how to think about it and internalize this concept. Okay, so D Hyde is also providing the up-down rule 1, up-down rule 1, surf, space rules, okay, rules, trend ID. Okay, guys, and again, I want to make you participate of this definition. I could certainly come up with, you know, whatever word that would come to my mind and just type it out there, right? But the idea is that these rules mean something, right? And because again, I said that millions of times, and I will say it again, to be a good trader, you need to be confident of what you do. And to be confident, you have to practice and develop experience. And for you to practice, you need to be somehow confident that what you practice will lead to good results. So if you think about it, you need the confidence before you practice, but the confidence also comes after you practice. So it's kind of like a situation where many people get stuck in learning how to trade and never get to trade, or they trade with lack of confidence. And, you know, it's a little bit of a mess. So in order to help you to overcome that initial problem that many traders around the world have when they're learning how to trade, and I know that some of you in this group are quite experienced, so you don't have this problem any longer. But for the ones of you that are in the beginning part of your journeys, well, I want to help you to start clicking the button, because that's how you will develop skill, experience, confidence, and all of that. But at the same time, how can you click the button if you don't have this initial confidence yet? So the way I want to help you to develop that initial confidence that will lead to the very good confidence, which is the one that comes from experience, it's by giving you a lot of details that explain the why. Okay, the why. Why is it that we do certain things the way we do? What is the rationale behind it? What are we pursuing? What is our intention when we do step 1 or step 2 or step 3? Okay, all of these, okay, all of these are you know, it's key for you to begin your initial trades. Okay, trend wars, another suggestion here. Okay, very good. So I'll keep it all there. Okay, and you know, at some point we'll come back here and we'll have to take a decision, of course. Okay, because all those suggestions are great, but we'll have to pick one. Okay, so we'll do that. But again, it's important that using your own words, using your own mindset, the way on how you think about trading and investing, that, you know, somehow this rule makes sense to you. It has a strong meaning, because if it has a strong meaning to you, then you will have an easier time applying it. Okay, good. Anyway, so we talked about this rule number 1. And by the way, thanks a lot, guys. We talked about Orlando, I'm reading you now. And by the way, Sandy, I missed your comment. Let me see your comment. Jose, is this only going to be about TradeStation and futures? I'm using a trading view and only do option stocks and ETFs investing. Now, Sandy, what we're going to do here is going to apply to all markets. And I will be switching back and forth between TradeStation and TradingView as well. Okay. Now, of course, some of you may be trading futures. Some of you may be trading Forex. Some of you may apply it to cryptocurrency. Some of you may apply it to stocks. Some of you may apply it to ETFs. And therefore, your particular trade plan, your particular outcome will be different from each other. Because, for example, if you were to apply these to stocks in I don't know, in Dubai, for example, to pick a place. In Dubai, you cannot short stocks. So then, yeah, you could certainly apply the rules, but shorting would not be allowed. And it's not because of the methodology or the platform or the trading view or the UFOs. It's because of the regulation in the Dubai market, right? So same applies with software. You know, TradeStation is more advanced as a platform compared to TradingView, even though TradingView is amazing. So there are some functionalities that I may illustrate and demonstrate with TradeStation that may not apply to TradingView, and vice versa. TradingView also have some functionality that is not available in TradeStation. So, you know, we're building the methodology and the rules all together, and you could apply it to any market, any platform, any exchange, any product, any instrument, any whatever. Okay, this is going to be a universal way on how to trade, no matter what. Okay, of course, you will have certain restrictions that will depend either on the market in which you trade, or the platform that you use, or the amount of money you have in your account, or the amount of time you have per day to trade. So, you know, everybody will have a different outcome, but make sure you all understand that my intention is very completely 100% universal. Okay, so I want to provide rules for all of you. Okay, and by the way, that's how you want to learn, because what if, let's say, let's go crazy for a minute. What if TradeStation gets acquired by TradingView, right? What if TradingView gets acquired by TradeStation? What if TradeStation get acquired by TD Ameritrade? You know, what if, you know, some bank in Asia acquires TradingView? You never know what's going to happen. And what I want to provide you with is a methodology that is universal. So if something changes in the past, including the broker, the software you use, whatever, you have tools to keep trading. You don't get stuck just because now, you know, something changed and you don't know what to do. Okay, so super valid question, Sandy. And of course, you know, there will be times you will see me working with TradeStation. There will be times you will see me working with TradingView. But my suggestion is that all of you, in a perfect world, you will be using 2 computer screens when doing those sessions. And whatever I am doing, you kind of replicate it with your software. Okay, so if you are using TradingView and I'm doing with TradeStation, just replicate it with TradingView. So you are kind of following what I'm doing with whatever platform you use. Okay, that's the idea. And the rules would remain constant. Very good, yes. Yes, Andrea, nice to see you. Very nice to see you. Gabriel, how are you, my friend? Trust the trend. Okay, I'll add one more here. Another suggestion. Love it, love it. Good. So trust the trend. Very good. And I know my notes are a little messy at this moment in time. It's a lot of typing here. But we'll clean up as we conclude a collection of sessions together over the weekends, sharpening, and we get to the end. Then what we will do is that we will sharpen the sharpening notes, okay? And we'll end up with very neat, a very neat collection of rules, which actually I'm gonna put all those rules, guys, okay? All those rules, I'm gonna end up putting them in the form of a diagram flow, right? So in the end, you will not have much text. You will not have like the classical step 1, step 2, step 3. We're not going to do any of that. It's just going to be arrows pointing at places, and just follow the arrows. And that's how you're going to be, and that's how you will be building your trades. Okay, so that way it becomes even more mechanical. Okay, good, perfect. Perfect. Very good. Okay, so now the last thing that we were commenting on the last session is when we started getting into time frames, because we said, okay, we need to look at the trend. We need to look at which side of the market should you be in, should you be long, should you be short. We talked about all of that, and we said we're going to use 2 time frames to do that. And when it comes to 2 time frames, we gave them a name, which one of the time frames was the common time frame, and the other time frame was the edge time frame. Okay, and the common time frame, the power of that time frame was to actually look at a classical time frame that everybody uses, so you get to see the same thing everybody sees, and therefore you get to anticipate what people may anticipate, but you enter before everyone else's enter, right? Because for you to profit in a long, you need more people to buy after you bought, and for you to profit in a short, you need more people to sell after you short. So if you listen carefully to the 2 statements I just had, in both statements I use the word after, which means that you need to enter before, so after you enter, other people enter, right? So looking at that common time frame is going to help you identify certain things that could be useful. And one of the things that we discussed the other day was the moving average. Okay, the moving average we discussed was going to be important because it's not like it's magic or anything like that, but first, it makes you mechanical. You know, if it's above or below the average, it's black or white. There is nothing to discuss, right? It's either above or below. That's it. So in your decision-making process, it's mechanical. You're not going to find yourself in a subjective situation where you are like, oh, it looks like it's going up. It looks like it's going down. But every time you say something, when you start saying something and you say it looks like, it's subjective by definition. And therefore, you will not be mechanical when trading. So then you are exposed to how lucky you are. Okay, and again, it's great to be lucky, but we don't want to rely our results to luck. Okay, we want to rely our results to mechanical action in the marketplace because consistent action leads to consistent results. Okay, and you have heard me say that a million times, isn't it? And it's those are principles that needs to be embedded on how we think. So the moving average, the beauty of it is that it makes you mechanical, but also the other beauty of the average is that it may imply an addition of unfilled orders to be added in the marketplace, unfilled orders that are not available yet, unfilled orders that AutoUFOs, the beautiful app that I have running now in the 2-minute time frame here, okay? So in that 2-minute time frame, I got the AutoUFOs, okay, which I believe all of you are familiar with the UFOs, right? Well, those AutoUFOs identify where the unfilled orders are, but what the AutoUFOs don't identify is where unfilled orders may be added, okay? And unfilled orders may be added thanks to a moving average. And notice I said may, right? So I'm not saying that the moving average is going to be super, super crazy high probability. The high probability is going to come from the AutoUFOs. But if you were to mix them together and you have unfilled orders in the marketplace available already, and on top of that, you were to add the moving average that may add unfilled orders in the marketplace after you got in, well, you are increasing the probability for a profit, or even you are increasing the probability for a larger, winner instead of a small win, probably a bigger win. Why? Because you got many more people coming in after you came in, right? And so all those things is things that we discussed the other day, and we said that to do that, ideally, you will want to do this with the common time frame. And the reason why you will want to do it with the common time frame is because you want to use a time frame where many people are likely to buy because of that moving average. And when I say many people, remember I also refer to computers. Okay. You want to use those common timeframes that everybody uses because those may be a catalyst, may be a magnet, may attract many more orders to kick in after you got in. Okay, so that's why we're gonna be using that common timeframe, which we define for intraday trading as 15, 60, and 240. But then we also talk about the edge timeframe, and the edge timeframe today I want to get very deep into that. Okay, because we touched on it the other day. Hopefully it made sense, but we need to get way deeper into it. The edge time frame is the time frame that will give you an edge. And I want to thank Brian again one more time for his suggestion. I think that this name is a beautiful name that clearly says in one word what we are looking for. We are not looking for now a time frame that everybody's looking at. We are looking for an entry point in a place where only us are entering, right? Because if you're trying to enter at a price point where everybody's trying to enter, you may not get filled because many other people are trying to get filled, so you may not get filled. Or if, just like everything in life, if you think of any business that has developed, throughout the years, like you go back in time a long, long time ago, maybe, I'm just going to say something, maybe not too accurate, but maybe coffee shops were certainly available out there, but maybe there were not as many as nowadays. Nowadays, you have so many franchises and branches and coffee shops all over the place, right? So what happens? Well, probably, that business was more unique. And, maybe you could have a greater margin, or maybe you could charge more for certain products, or maybe you can have certain business advantage because of the uniqueness of your business. Now, if the business becomes much more common, much more commoditized, and everybody is running the same type of business, well, probably it's going to be very difficult for you as a business person to differentiate yourself from other competitors, and therefore you may not be able to charge as much for coffee anymore, because you know if you charge too much, given the fact that there are so many other coffee shops around, so people will end up in the other coffee shops because they have so many other places where to choose from. So again, I'm just making a generic concept about business, just so you understand how I'm thinking about getting filled on a trade. If too many people are trying to get filled at the same price, you may not get filled with all your contracts. You may get half of your position filled, and then the market moved and you didn't get filled, or you got filled in half of the position only. So you want to have that edge where it's kind of like you are spotting that unique opportunity in the marketplace that only you or only a few of us are identifying at the same time. That's why we call it an edge. Okay, it's a unique time frame that only us use. Very few people. And we want it to be lower time frame. That's another concept that we commented the other day, and I want to get deeper into that today. We want it to be a lower time frame when compared to the common time frame. So if the common time frame was 5, okay? Sorry, if the common time frame was 15, well, then the edge time frame, we selected it to be 2. Okay, why lesser? Okay, well, because you want to be a little more invisible. You also want to reduce the risk, and the larger the time frame, the deeper those UFOs are going to be. Where the smaller the time frame, the narrower those UFOs are going to be. In other words, the distance from entry to stop is going to be less on a lower time frame, and the distance from entry to stop is going to be more in a larger time frame. So in other words, you have a greater risk per contract in a larger time frame, and you have a lesser risk per contract in a lesser time frame. And therefore, those edge time frames we are killing many birds in one stone here. We are kind of entering at prices where not everybody may notice that's a good entry price. Second, we are being a little invisible too. Third, on top of that, now we are reducing the risk per contract per trade, per contract or per lot or per share, right? Depending on the market you trade. If it's stocks, it's per share. If it's forex, it's per lot. If it's futures, it's per contract, or options per contract as well. So the edge time frame is key. Now, if you recall, we started discovering the world of share time frames and tick time frames. And those time frames are going to be really, really key in really, really, really fine-tuning your entries, okay? Having said that, we will also talk about finding a balance between being a perfectionist and really going for something very, very special, but at the same time, crossing the line, and now instead of being a perfectionist trying to do things well done, now you become a perfectionist who is really overthinking this, and now it takes 2 hours and a half for you to plan a trade, so you never trade. Is that making sense? So we need to find a balance, okay? And I want to give you more tools and more possibilities, but as I give you more tools and more possibilities, I will give you a couple of choices, right? Keeping the methodology a little in the simpler side for the people that you have a personality which is a little more, instead of more, I'm going to say less perfectionist. Okay, if you are a little bit less perfectionist, I'm going to give you a simpler way to do this. If you are a little more perfectionist, I'll give you a way to make this a little more precise. Okay, but in both cases, we need to keep it simple, because if you make it too complicated, now it's going to be a mess. It's going to take too long to plan the trades. It's going to be too many variables to plan the trade, and therefore too high of a probability to make mistakes along the process, because the process is too complex. So we're going to have to find a balance and not to overcomplicate our edge time frame. Okay, because there is this fine line, guys. It's so easy to cross the line and just fall into like, that's it, now you are really overcomplicating this. Is that making sense? So we need to find a balance, and I'll talk about all of these properly. Right now, I'm just giving you, as I normally do, the big picture, so you understand the type of conversation we're going to have, so I can get into details and end up with rules. But you understand why the rules are the way they are, okay? Because the last thing I would like you is to follow rules just because I said. I mean, I would certainly appreciate if you are ready to follow whatever rules I give you, because it says a lot, and to be honest, it flatters me and it makes me feel very good. Okay, but putting all of this on the side and being more serious than that, we are human beings. The majority of us here are adult, and if not adult, definitely late teenagers or something like that. That would be my expectation for age, and therefore we have a human need, which is to understand why we do things the way we do, because if you don't, then you cannot be confident at executing. Okay, so it's not about me. It's not about because Jose said so. It's about because Jose gave you an explanation. Hopefully it made sense. Hopefully it clicked, and now that you have digested it, you feel comfortable with it, and you had a couple of decisions on top of it, and now you do it. Okay, that's the idea, and this is what I'm pursuing to do all together. Okay, so let me take a look at the comments box, because some of you have been typing, and we will begin with all of this. David, flow chart, yes, flow charts. That's the key. Okay, I've seen it way too often for years. Traders that either don't have a plan or have a 55-page plan. You cannot follow a 55-page plan. Okay, so we're gonna have a 1 page of paper, one side, and it's gonna be a flow chart. That's gonna be the ultimate picture of our plan. Okay, that's where we're going, guys. Ahmed, sounds great. Using the edge 2-minute chart with the opening for CL was great. Yes. Thanks for that, and I saw your message the other day as well, so thanks for that, Ahmed. And by the way, I love it that not only you guys see it working for you, what I love as well is that I can see your engagement and putting the time and the effort and the practice. Okay, so that's how you do it. Okay, well done. Orlando, edge time frames get violated sooner, right? What do you do then after you are in the trade? Well, Orlando, maybe, I get your point, but maybe, I'm going to give you two maybes, okay, at this point. This may be true if you are on the wrong side of the market, which is step one, okay? And second, it depends of what you're going to do with those edge timeframes, which is what I haven't explained yet, okay? So we're going to try to minimize what you just said there. And Orlando, 100% agree and understand where you're coming from, in the sense that there is this common normal belief out there that the lower timeframes are very fragile, and price goes through levels, with no problem and stuff. Well, it depends, okay? It depends on a few things, which is exactly what we need to understand, which is exactly what I want to explain. Because if you were to stack all of these in your favor, then you would have an edge, okay? And that's why we're gonna call it edge timeframes, okay? So get your point, but at the same time, let's not fall into these common beliefs out there where, many people will tell you the lower timeframes are super dangerous, they don't work well, all that stuff. Well, guys, very simple here. Look, okay? We need to be careful with our beliefs, okay, guys? Our beliefs cannot be just because you heard it or read it somewhere. Your belief needs to be developed out of your own experience. So I'm very, very happy to guide you and lead you into developing the experience, but that's what I said before. I don't want you to do whatever I say just because I said. You need to build your own belief through experience. So what is the common belief? The common belief is that the smaller time frames are very fragile. Okay, great. So take a look at the 240-minute time frame of the S&P. Okay, 55%. Now let's take a look at the 2-minute time frame of the S&P, 67%. So what is more fragile, the 240 or the 2-minute? You get my point? Now again, this is a raw statistic, it's not looking at trend, etc. But in any case, we don't want to develop those very strong biases. What we want to do is to have a process, a thinking process, where the only thing our brain is doing is following rules. That's it. Okay? Trading is not, how do I put it? I'm going to say something a little crazy here. Trading is not like cooking, okay? With cooking, it's okay for you to have certain beliefs about, I like this brand of spices, or I like this, type of red bell peppers, and you have those beliefs. And because if you have those beliefs one day, let's say you want to cook something and you are lacking on some ingredients and you need to improvise, well, all those beliefs will help you to improvise and come up with something edible. That's great. But not in trading. Because in trading, if you improvise, what happens? You get in trouble. Unless you're lucky. And it's not serious to rely on luck, which I'm not saying that's what you're saying. okay? So the idea is to develop a thinking process, okay, where everything we do is all about rules, okay? And we don't even need to have preconceived ideas, okay? That's where I'm going, guys. Just follow rules. Not even to have a need of preconceived ideas. And by the way, you will get to observe things in the market, and you will develop, certain preconceived ideas, because we are human and you cannot avoid it. Like, for example, we are about to, in America, tax paying day. So normally that's an up day in the market. Okay, so if you look at statistics, you may see that. So you may develop those things, those type of beliefs, But if you do have those beliefs, when you trade, you need to learn to put them on the side, and not to trade based on your beliefs, but trade based on your rules, okay? That's when you will become an amazing trader, okay? So Orlando, super, super good comment, good question, valid comment, valid question. But at the same time, healthily, I am a little bit of challenging some of the meaning of what you wrote, okay? In a healthy manner, just a little challenge there, just to get you all thinking, because there is a lot of good information in Orlando's question, but at the same time, developing a strong belief in that direction may get you in trouble, because now you have a trade in a lower time frame and you don't take it, and you take the one with a larger time frame with a bigger size, because now you are all confident that just because it's a higher time frame is going to be a better trade, and next thing you know, you get in trouble. Okay, so yeah. Thanks Orlando. Thanks everybody, because I deviated a little bit from where I was going with the timeframes, but your question was worth it, Orlando. Thanks for bringing that up. Okay, Suhash, do we need to have a rule for minimum size of risk on smaller time frame to avoid stop loss? We'll talk about that, if that's okay. We'll talk about that. Jose, your rules are very simple to understand. My 13-year-old is executing trading SIM account. Thank you for your methodology and UFOs. Thank you so much for saying that. That's the goal. Okay, the goal is that. Think about it. Why would you want to have rules where we all need to become Albert Einstein to be able to trade? Does that make sense? So, we need to align our methodologies to how the markets work. And the way the markets works is simple. Orders get filled. That's it. That's the bottom line. So if we were to align our methodologies to that, and then we just add a couple of things surrounding our buy and sell decisions, just to manage the risk, manage the portfolios, manage the accounts, lock in some profits, take profits when it's the right time. Just surround ourselves with a few rules, but the whole methodology is based on what the market works. Then we should come up with something simple, and therefore anyone could trade. Okay, that's the idea. Good. Perfect, guys. Okay, love it. Love these conversations, guys. This is so healthy that we spend time over the weekends to talk about all of this. Okay, even though sometimes I'll get a little too basic for some of you. Maybe some other things I said, some of you know it very well since years ago, but still, it's good to go back to the basics. Okay. So anyway, so we are now getting into a deeper conversation related to edge timeframes, which imply the use of minute timeframes, but also share timeframes and tick timeframes. Okay, and there are many things that we need to discuss here, because for me to be able to talk about edge timeframes properly, I also need to talk about symbols. Okay, I also need to talk about market symbols. And so we are opening a wide door here to talk about multiple things, and this is going to be important. Okay, so let's go for it. Okay, so first of all, Sandy earlier was making a comment related to TradingView compared to TradeStation or even other platforms, etc. Well, if you look at the table that I put together the other day when it comes to edge timeframes, we got, for example, if we use the 15-minute time frame as a common time frame, then I came up with two possibilities for your edge time frame in minutes, which is either the 2-minute time frame or the 5. Okay, so why did we come up with those two columns? Well, if you were with us last Sunday, you know why. It's because not all platforms allow for the charting of customized timeframes. Not all platforms allow for that. So TradeStation does. Okay, with TradeStation, you could actually, once you are charting in a minute time frame, and you can see the word minute there, you can just go ahead and type anything. So if I type 555, and I hit enter, it's just going to produce for me the 555-minute time frame. So TradeStation will just produce whatever customized time frame you want just by typing whatever value you want. You can either type it, just by clicking on the white space of the chart, and you just type 111 and it will produce that time frame, the 111. Okay, here we go. Or you can use the drop-down menu. Now, with the drop-down menu, TradeStation does not give you access to the 111, for example, because that's a customized time frame. So with the drop-down menu, you would just go ahead and pick whatever options are available, which are the classical ones, the standard ones. But again, you can go as original as you want just by typing. You click on the white space of the chart and you just type, or you can also either double click on the candles. Okay, you can double click on the candles and it will bring a pop-up menu, and you can here type whatever number you want, 222, and then you click OK, and now it will produce the 222-minute time frame. Okay, another way to get to that menu is right-click, format symbol. I guess that most of you know that. With TradingView, is different. Okay, with TradingView, the normal way to access TradingView is by clicking on at this moment in time, it shows D, which is the current time frame I have loaded, is the daily time frame. So when you click on that button, which currently shows D, it will give you a menu with multiple choices. If you click 5 minutes, then here it will change to 5M, and now you have a 5-minute time frame. Okay. So now notice that here I cannot type anything. I mean, I could type, but if I start typing, what TradingView understands is not that you are changing the time frame. What TradingView understands is that you are changing the symbol. So you want to go to another symbol, such as the euro, for example. Right? So if you do that, now you are using the euro. So TradingView, it's a little different as a tool because of two reasons. First, in the menu, it may not show you the time frame you want. For example, in this case, the 2-minute time frame is not there. Okay, so it doesn't show you the time frame you want. Second, it also depends on the type of membership you have. So if you look at the TradingView website and you look at their pricing section, okay, I believe all of you or most of you probably know this. Okay, but I would expect that most of you are using the basic access to TradingView, which is free. Okay, but also TradingView got other possibilities. Okay, other possibilities, which is Pro Plus, and Premium. Okay, so what does that do to you? Well, I would say for most of us, it's not even needed. But for example, let me see if I can find it. Custom time frame intervals. Okay, so custom time frame intervals. Okay, this is a feature that would allow you to use, for example, the 2-minute time frame on TradingView. Okay, but as you can see, that feature is not available with the basic. If you wanted to have that feature active, you would need to subscribe to the Pro. Again, do you need to do that? Yes or no, it depends. It depends on your trading style. You will know better what is best for you once we conclude and we come up with a whole methodology and you get to see all the choices, because remember, I'm going to give you multiple choices. A choice which is going to be more in the perfectionist side, and also a choice which is going to be more in the simple side. Okay? Plus, I will add one more, which is a choice which is going to be more in the conservative side, okay, which I haven't discussed that yet. So I'll give you multiple choices, and depending on the type of trader that you choose to be, well, you may want to use the Pro or the Pro Plus, or maybe the basic is good enough, or maybe you're going to be using TradeStation for when you do the intraday trading, and maybe TradingView for the long term, or again, everybody's going to be different. Okay, I'm not going to tell you which tools are the best for you, because in the end, that's going to be a personal preference. I'll be delighted for sure to answer questions if you have questions about the tools. But in the end, which ones you will want to use will depend on your personal preference. Okay, so first of all, again, coming back to what I was saying, notice that we're going to have 2 edge timeframes based on time. So the column on the right, okay, is going to be for the people that you use a platform that does not give you access to customized time intervals. Like, for example, let's say you are using, I don't know, eSignal, or you are using interactive brokers, okay? And you want to continue using that platform and you plan to not to add any other tool to your trading, which is fine. Okay, well then you may need to go to the 5 because that other platform doesn't give you the 2 because it simply does not exist. Okay, so if that's the case, that's the one you would use. For the people that were going to be just a little more perfectionist, okay, and again, perfectionist has a good side and a bad side. Remember, if you are too perfectionist, now you are overcomplicating, right? So, you know, we don't want to cross that line, okay? So when I say perfectionist, I say it as a good thing, but remember, let's not cross the line, okay? Because now it becomes overcomplicated and that is not good. So for the people that we want to be a little more perfectionist, okay, maybe you'll be open to utilize brokers such as TradeStation, or maybe activate the membership with TradingView so you can customize timeframes, okay? So we'll talk about that. Okay, so that's why we got 2 columns. But in any case, no matter which timeframes you're going to use, you have to use the proper symbol. And symbologies, okay, depend on the platforms that you use. For example, if you were to trade the S&P, okay, if you were to trade the S&P, which in TradeStation, as you can see, has the symbol @ES, okay? If you were to do that with TradingView, well, take a look that if I type ES, right, it gives me access to a drop-down menu here, where if I click on the drop-down menu, it gives me access to ES1 exclamation mark. This happens to be the continuous current contract in front. That's the equivalent to @ES. So now, instead of @ES, in TradingView is called ES1 exclamation mark. Okay, so symbology depends on the platform. If you were to use a platform such as TD Ameritrade, for example, to pick another one, instead of ES1 exclamation mark or @ES, okay, with platforms such as TD Ameritrade, it would be, sorry for that, it would be something like that, /ES. Okay, so instead of @ES, it would be /ES. So again, of course, in our sections, okay, in our sessions, sorry, since AutoUFOs runs either on TradingView or TradeStation, I will be using TradeStation or TradingView. Is if on your side you happen to be using a different broker, a different platform, or you happen to be using TradingView for charting purposes, and you happen to execute your trades with different brokers, out of being diversified, you need to make sure that you use the right symbol in whatever platform you use, okay? Which, by the way, I would expect that this is something that's going to happen to the majority of us, okay? Again, it depends probably on how long have you been trading, you know, since you started trading, you know, and therefore, you know, like, again, just sharing a little bit about myself here, but, you know, I trade my money, but apart from trading my money, I trade my family money too. So, you know, when I trade my family money, how do I do it? Well, I do not access the accounts of all my family members one by one, because all my family members gave me their username and password, and that way I execute for them. No, I don't do it like that. That would be very tedious. What I do is I use a structure with a master account connected with slave accounts, where the master account belongs to me, the slave accounts belong to my family members, and when I execute for myself, my trades replicate with a different size automatically for all my family members that are connected with my master account via their slave account. Okay, so I only do the trade once, but that is something I do personally with one broker, which is Interactive Brokers. They have something called friends and family accounts, and you can do that very, very simply. You know, as long as you don't exceed $25 million or 15 family members, you can do it very easily. If you surpass that, then you need to, you know, you need to be licensed to be able to do that. You need to be a registered advisor, okay? At least based on US law. But anyway, so I'm saying all of this because it happens to me many times where I am planning a trade either using TradingView or TradeStation and then execute with Interactive Brokers. And what happens with IB? Well, with IB, the symbols are different. Okay, well, not always. Like, for example, for stocks, okay, for stocks is the same. It's like, for example, if I'm trading Microsoft with TradeStation, okay, so Microsoft with TradeStation is MSFT. Microsoft And again, I know I'm talking about symbols. That what I'm saying, some of you already know that, but it's important everybody knows it. So bear with me if you know that already. So if I type MSFT with TradingView, I get the same thing. So here is Microsoft with TradingView, Microsoft Corporation, okay? And here is Microsoft with a TradeStation, okay? Same symbol, MSFT. If you were to use Thinkorswim, if you were to use Fidelity, if you were to use Interactive Brokers, it's MSFT. With stocks, it's kind of the same, for all platforms. Okay, at least I would say I've never seen a platform that doesn't use the same symbols for stocks. But with futures, it's not the same. With futures, some platform will have an at, some platform will have a slash, some platform will have ES1 exclamation mark. Etc. Forex is the same. So with Forex, okay, EUR/USD with TradeStation is the euro. Okay, but now with IB, for example, it would not be EUR/USD. It would be EUR. Okay, it would be. Let me do it here. EUR.USB. So you will need to add a dot. Okay, that's how Interactive Brokers would do it. Okay, with TOS, it would be EUR/USD. That's how Thinkorswim, which is a platform that belongs to TD Ameritrade, does it. So long story short, know your symbols. Okay, that depends on the broker that you use, and the broker that you use may or may not be the broker that you use for charting purposes. Okay, in my case, I chart with TradeStation and TradingView. I also execute with TradeStation, but I also execute with TOS. I also execute with IB. You know, I have multiple brokers. So some of the brokers, I only use them for order placement purposes, where some of those charting services, I use them for charting purposes exclusively or for charting and execution, right? So it depends. So know your tools, okay? Know your tools, know who is who, and therefore know your symbols. Okay, that's the first comment I have about symbols, which is just common sense, and probably all of you kind of knew what I had to say here. Okay, but now we need to go a little deeper. There are a few things now that are going to be critical. Okay, so first point, different platforms, different charting services may have different symbols for the same market. So know your symbols. Pedro, 21 time frame of CL doesn't show UFOs. We can see that later. Probably it's because you don't have anything quality, or you need to load more candles. Okay, you need to load more candles. Okay, if it doesn't show, it doesn't show. Elaine, Jose, shouldn't the second edge be 10 for 60 and 30 for 240? I'll come back to that, Elaine, if that's okay. I get your point. Bear with me as I talk about symbols and so on, because you'll see how everything comes together and falls into place. Okay. Let me see. Thank you, dear, for that comment. Ahmed, can I say you are familiar here? Love your comment, love your humor. It would be great, Andrea, if you could show the family master slave trading one of these days. Yes, Andrea, I will certainly do that. We could certainly do that at some point. Okay, I think it would not be related enough to the sharpening sessions we're doing at the moment, but that's a great suggestion for sharpening sessions sometime in the future. Definitely. Okay, that would be great. I mean, all of you should be thinking of doing that, isn't it? You know, it takes no energy, and now you are helping all the people you care about, you know, with the same trades you take for yourself. So, you know, we should all be doing that. Okay. Good. Very good. Very good. Very good. Perfect. Good. Okay. So now, so more about symbols. And now I want to break it down into two groups. Okay? One group is going to be Forex products, and the other group is going to be futures products. Okay? So two main groups when it comes to symbols. Okay? So when it comes to ticker symbols, okay, we have two main groups. We have the futures and we have the Forex. We need to understand that not only we're going to have different symbols because they are different products. Actually, the difference go beyond that. The differences that I need you to keep in mind when it comes to all those tradable products is because of the fact that futures, okay, let me bring here, futures is a centralized product. So what does that mean? Well, it means that futures trade in an exchange, where Forex is a non-centralized product. What does that mean? It means that there is no exchange. So what are the implications of that? Well, there are a bunch of implications that are key for you to understand just because they are important, but also those implications that I am about to mention, that some of you may already understand what they are, but those implications may also imply a very specific way on how to use the symbols. Okay, a very, very specific way on how to use the symbols. For example, if Forex is non-centralized, okay, what are the implications? Well, first of all, different quotes is one of the implications. When you trade centralized products, could be stocks, could be options, could be futures, one of the roles of the exchange is to gather all the information about the trades and the buying prices and the selling prices of those trades. And all of this is saved and stored in the databases of the exchange. So basically, when you load a chart at home, like I'm doing right now, if you are doing it with a product which is a centralized product, such as a stock, for example, MSFT Microsoft. So the moment I load MSFT Microsoft, what's happening behind the scenes is that I am basically downloading the information coming from the exchange. I mean, the information technically is not coming from the exchange, it's coming from TradeStation. But TradeStation, okay, or TradingView is the same thing, is whatever charting service you use. The charting service you use is connected with the exchange. So it's acting a little bit like a gateway to connect you with the exchange, and basically you end up on your screen with data that is coming from the exchange. In other words, because your broker is kind of like a gateway to connect you with the exchange, and basically the information you get is exchange information. So no matter the broker you use, no matter the charting service you use, you should end up with the same data. Right? So if I load Microsoft on TOS or I load Microsoft on TradeStation, I should get the same data. I should get the same chart. I should get the same UFOs. I should get the same price. I should get the same everything. Why? Because the data is not given to you by the broker. It's given to me by the broker, technically speaking, but the broker didn't act as a feeder for the information. The broker acted as a gateway, kind of like giving me access to the information from the exchange, right? So in other words, when you trade centralized products, you will have the same quotes no matter the broker, okay? No matter the charting service. No matter if it's TradingView, if it's TradeStation, if it's TOS, if it's IB, you will have the same quotes. And the reason why is because everything is coming from the exchange. Okay, that's why. Well, with Forex is not the case. Okay, with Forex is not the case. So first of all, you're gonna have different quotes. You can see that very well. Actually, TradingView is great for that, because when, for example, you type EUR USD, which is the euro, okay, and you click Forex, notice how you can get the euro FX US dollar information coming from FXCM. So this is the data feed from broker ABC, which in this case, broker ABC is FXCM. But you can also get the data feed from Oanda, which is broker XYZ. It's another broker, okay? Or you can get the data feed from the ICE, which is a little bit of an aggregate feed, okay? And to be honest, I don't know exactly how the ICE puts the feed together. It would be actually interesting to do a little research, even though out of curiosity, because we cannot change it, so it's what it is. But it's a little bit of an aggregate information. So they are basically taking information from different brokers, aggregated it, and they just plot it for you. Or you can also get the euro US dollar information coming from forex.com, which is Gain Capital, which is another broker. Okay, so look at the difference. So if I load the euro from FXCM, the current price is 112.98.6. Okay, so keep in mind 986. While if I switch, okay, from the Euro USD, which is FXCM, and I go for Rwanda, instead of 98.6, I get 98.7. And the difference is minimal. The difference is found in the 5th decimal place, but there is a difference. You guys see that? That would never happen with futures, because futures is traded in an exchange or stocks. If I look at the data, the feed with the eyes, is 98.4. Okay, it's 98.4. So again, a little bit of the difference. If I look at Euro USD and I look at data feed with forex.com, it's 99. Okay, in that case, we do have a little bit of a bigger difference. But still, you know, is located in the 5th or the 4th decimal place. So, you know, this again with futures will not happen, because the data is coming from the same exchange. So what is this going to involve? Okay, this consequence of having different codes depending on the broker that you use will have certain implications. Okay, so what are the implications? Okay, well, what are the implications? Well, the first implication is that we're gonna have to add extra room to our stops. Okay, in other words, if you were planning to have your stop located at 98, well, you may need to make it 96. Why? Well, just in case some other broker got a little bit of a different feed, and to them it was 97. Okay, so then you don't go for 97, because you may get stopped out and then see the market go your way. So then you go to 96. So you need to add a little bit of extra room to your stops. Okay, that's one implication that applies to Forex. The other implication that applies to Forex has to do with the fact that, you know, in trading, let me show you that, because you will see that very, very easily with TradeStation. So if I load TradeStation here, okay, and let me try to zoom in. Let me see, because it's going to be difficult for me to zoom in. Yeah, because TradeStation, I need to use a particular combination on my keyboard, and TradeStation will take it as something different. So I cannot zoom in, guys. So no, but it's okay. So if you look at what I have here, I got the B for bid price of Microsoft, which is 120.85. Then I have the ask, which is the ask price from Microsoft, which is 120.98. And then I have the last, which is the last price that was traded, which is 120.94. So basically, every tradable product in the world has three prices: the bid price, the ask price, and the last price. So what is the bid price? The bid price is the bidders. The bidders, which another way to say bidders is buyers. So the buyers are bidding 120.85. In other words, they would love it to buy Microsoft at 120.85. Of course, they cannot do it unless someone sells to them at 120.85. The only way to buy is someone sells to you. But they're waiting there at 120.85, waiting to get filled. And hopefully someday they'll get filled at 120.85, and they would love it. That's why they are bidders. They are bidding, right? The A on the right is the sellers. The sellers are asking. So that's what the A stands for, A for ask. So the sellers are asking 120.98. What does that mean? And they would love to sell at 128.98. They are asking 120.98. And if some person wanted to buy at 120.98, they would be delighted to sell to them at 120.98. That's why they're asking. Okay. Now, in other words, the B is the bid, which is the buyers. The A is the ask, which is the sellers. But these are not trades that haven't happened yet. These are potential trades that may happen if a buyer chooses to buy at the ask price or a seller chooses to sell at the bid price. Those trades have not happened yet. Therefore, those trades have not been registered in the exchange because those trades have not happened yet. The B and the A simply tell us the price at which the buyers are willing to buy or the sellers are willing to sell. But those are not trades. The trades are in the middle, okay? That's when we talk about the last. The last, L for last, means this is the last trade that took place. And the last trade that took place either took place because a buyer decided to buy from a seller, or a seller decided to sell to the buyer, or a buyer and a seller agreed on a price somewhere in between and they agreed on the deal and the trade took place, and now that bid price or ask price is not B or A, that is now a trade that took place and therefore is a last price. And the last price is what you see on your chart when you load a chart of a product that trades in an exchange. So if I load Microsoft, which is a stock that trades in an exchange, to be precise, the NASDAQ exchange, right? And I see 120.97, it means that the last price that was traded during regular market hours, okay, because here you can see 120.94, this is post-market hours, okay, so forget about post-market. So during the regular trading hours, the last trade that took place was 120.97. Okay, that was not the bid, that was not the ask, that was a trade that took place at that price. So in other words, when you chart products that trade in exchange, what you see on the chart is the last. If I chart ATS, which is the S&P 500 futures, again, it's futures, it trades in an exchange, to be precise, in the CME, which stands for Chicago Mercantile Exchange, and you see 29.1175. What is that? Well, 29.1175 is the last price that was traded. Okay, but what if I load Euro USD? Well, now we are dealing with Forex. And what do we know about Forex? There is no exchange. So then it cannot be the last, because no one is registering the last. There is no entity, database, company that has the responsibility of register all the Forex trades taken in the whole world and create a database out of it. That would be great, but that does not exist. So what you see in a Forex chart in 99% of Forex platforms, it could be TradingView, it could be TradeStation, it could be Thinkorswim, it could be Interactive Brokers, it could be MetaTrader 4, you name it. In most of the trading platforms where you have Forex data feeds, what you see is the bid price. Okay, so now implications is that you need to either use the bid, okay, when selling, and the ask when buying. Okay, so you need the bid symbol. Okay, you need the bid symbol when selling. Okay, you could add .b or simply add nothing. Okay, or you need to use the ask symbol .a when buying. So if instead of Euro USD I was to type EUR USD.b, okay, what do I have now? You can see here on the upper, it says .b. What do I have now? I have the bid price for the euro. That's what I need. If I need to place a sell order, that is the chart I should be looking at. Why? Because you sell to the buyers and the buyers are bidding, right? And notice the price, 112.97.3. Okay, where if I switch to Euro EUR/USD and I add .a, let me do it again, EUR/USD.a, and I hit enter, notice how now on the upper left is going to show me EUR/USD.a. Okay, come on. Okay, so it's taking a little bit of time. Okay, let me do this. So EUR/USD.a, you guys see that? Okay, and notice how it's not 112.97.3, it's now 113.003. Okay, so this is the ask price, and this is the symbol you want when you buy, because you buy from the seller and the seller is asking, hence we need to use the .a. Okay, so again, this is something that we need to do when charting. Okay, I'll look into that for TradingView as well. For you to understand better how to do that with TradingView. But right now, if that's okay, I want to talk about symbols for futures, okay? Because what I'm sharing with you now is the concept, and then we'll put rules into it. We'll put it in a table, etc., so we'll know exactly what to do when. But let me ask you guys, how is it going so far, guys? Everybody with me? Everybody following? I know some of you, this is something that you may know already, but this is important for everybody. Okay, so I need to explain all of this. Let me take a look at your questions. Pedro, why are you using an old version of TradeStation? I switch back and forth. Depending on the platform that I use 10, 9.5. I kind of like to use them both, to be honest. I run some of my TradeStations, like for example, the one I'm running now, I'm running it on my computer. But I also run my TradeStations in VPSs. So I don't know if you know what's a VPS. A VPS is a virtual private server. So I have basically computers running 24 hours on the cloud, and I run multiple TradeStations in those multiple computers because I am monitoring or scanning or doing different things with different accounts, different username and passwords. You can only run one TradeStation per computer, and I need to run more than one because I manage or trade multiple accounts. So I use VPSs. Okay, so I actually use all versions, Pedro, but I kind of feel that, especially when I do a mentoring session, I think that the white background probably it's a little better for you guys in case you do a screenshot and you want to print. So 9.5 looks a little lighter color than 10.0. Okay, that's why. Yeah. So let me see. Yeah, I see that Dirk and Pedro, you guys are talking about certain things. Pedro, Jose, the Forex and futures on FX is a different price. No, because of the feed only. Futures are print. Yes, yeah, I'm going to talk about futures in a minute, okay? But right now I'm talking everything I said up to this point. It's spot Forex. That's it, okay? We can even talk about CFDs, okay? For the people outside of America, you may be trading CFDs on Forex or CFDs on commodities, or CFDs on market index, or CFDs on other products, which are an okay product to trade as well. And we can also talk about that. Okay, but we'll do CFDs another time. Okay. What if we are restricted to Oanda? I would not understand why would you be ever restricted to a broker. You can switch to any broker you want. Oh, you meant TradingView and not Oanda. I'm not sure I follow your question, L. Daniels. If you don't mind to rephrase it, I'm not sure where you're going with your question. Maybe it was something I said earlier, and since I'm rereading it, I cannot fully understand what you mean. So it would be great if you could clarify that for me. Thanks. Let me see. Oh, yeah, I think I know what you're talking about now because I'm reading Dirk answer. Yeah, with Oanda, if you use MetaTrader 4, you have a button. You can switch from B and A for ask. Yes. Yeah, I'm in the process, El Daniel, for Forex. I'm still in the beginning part. Yeah, I don't have any MetaTrader platform in my computer. I don't have Oanda installed in this computer, so I cannot illustrate it. Okay, but it's very simple. Okay. Yeah, and David Hyde, I could certainly talk about the different look of the app, but then I would divert too much from the content. Okay, so I'm going to keep going if that's okay. And then towards the end of the session, I would welcome those questions if you don't mind. Good, perfect. Okay, so I just catch up with your questions on the comments box. So now, so again, Forex, we're going to have to use different symbols. Okay, why? I mean, even before we start thinking of which time frames to use, we're going to have to use different symbols, okay? And why is that? Because Forex is non-centralized. So we're going to have to use different symbols. The implications will be that we're going to have to add extra room for our stops. And also we're going to have to use the bid and the ask symbol when planning the trades, because in a perfect world, you would chart the last price for Forex, but that is not possible since there is no exchange. Okay? So everybody with me, guys? Could you guys please confirm that everybody with me? Give me a quick yes on the comments box, guys. Yes, John. And I'm gonna have the break time right now before we begin with futures. Perfect time to do a break. Yeah, I just want to wait for your confirmation. Good. Perfect. Okay, so let's do this. Let's have a 5-minute break. And as we come back, now we're gonna get into symbols for futures. And here we're going to get into a deeper conversation, okay? Because there are different schools of thoughts and different ways on how to think of symbol for futures. For Forex, it's easy. You just need to use the bid and the ask and add wiggle room. That's it. But for Forex, for Forex. But for futures, there is more, okay? So 5-minute break. As we come back, we're going to get into this, okay? So I'm just going to have a little timer running here, and we'll be back in 5, okay, guys? So see you in 5. Yes, absolutely. FB, we are going back to the edge timeframes, but I cannot do it unless I first teach you which is the right symbol to use. Because if you use the right edge timeframe, but you do it with the wrong symbol, then you get in trouble. So it's all related. I'm getting there. See you in a bit. 5 minutes. Okay, everybody, timer is 0, so it's time to restart. Before we do, quick confirmation, guys. Could you please confirm to me that you hear me? It will be good. So I know we are all back and we are ready to continue. Perfect. Wonderful. Okay, guys. So symbols. Okay, so we can talk about time frames. So with Forex, we made a few comments here. Okay, so now let's continue with futures. And when it comes to futures, basically, there are, actually there are many different types of ways to think of symbols. Okay, and sometimes it's quite confusing because, first of all, one of the big differences, okay, if you compare Forex and futures, is also the fact that futures have expiration dates. Okay, Forex does not expire. In other words, EUR/USD is the euro and will always be the euro, and it doesn't matter when, it's the euro. Okay, but when it comes to futures, you have expiration dates, and if you have been trading futures for a while, then you know that certain products have expiration dates which are of every month, but you also have other products that have expiration dates which are every 3 months. The majority, the most common, I should say, the most common futures products expire every 3 months, which normally are March and June and September and December. This is quite normal, and normally we represent that with 4 letters, which is H, M, U, and Z. Okay, those are the normal classical 4 expiration dates for most futures products, which are the most common, such as the S&P 500, the Euro futures, things like that. Okay, but again, there are other contracts, especially commodities, that have more expiration dates every month, or more than every 3 months. It depends on which product. Okay. But in any case, no matter the product you have, futures contracts don't last forever. They all have expiration dates. So therefore, when calling a futures market on your chart, when typing the ticker symbol to call that market data into your chart, you always have to use what we call the root symbol. For example, ES for S&P 500. And following ES, okay, you may need to add something else. Okay, so you have a suffix, okay, or you may have a prefix. You may also have something before. Okay, so it's how the symbol works. So you have the prefix, then you have the symbol itself, and then you have the suffix. Okay, now you could now play with that and come up with million different types of symbols that could look very, very fancy and could be very useful, or could be a complete waste of time. All of it. So my idea would be that we focus on something simple, where it's going to be simple and powerful, and we don't get overcomplicated and end up wasting our time. We want to do things that are powerful. So what would be the most classical way that most platforms would do when it comes to symbol would be to have you use as a symbol which is specific to the expiration. Okay, so it will be an expiration specific symbol. Okay, that would be the most normal thing, especially when you are dealing with platforms that are platforms devoted to execution. Again, so many names. For example, Ninja Trader comes to my mind. So there are many more. Typically, you would end up with things such as ESM19. The ES is the symbol root for S&P 500. Then you would have the M, which represents the June expiration, and then 19 would be for the year. Some platforms would not be 19, would be just 9. That would be for 2019, okay? With TradeStation, that would represent 2009. But with some platforms, it would also be taken as 2019. Some other platforms are going to be different. So again, know your symbols, know your platform, okay? But as a rule of thumb, you can have the symbol which is specific to the expiration date you selected. In this case, the key is the M. Okay, that's the key, the M. Or you could have something that is known as the continuous symbol. Okay, that's very common in futures to use continuous symbols, because since the contracts have expiration date, okay, let's say for example you are looking at the contract that expires in 1 month. Well, that contract may have been born 1 year ago, but it expires in 1 month. So what's the most you can chart? It's 1 year of data, right? And on top of that, that 1 year of data, not all of that 1 year of data is valid data, because when that contract was born 1 year ago, no one was trading the contract. The contract existed, but there was not much liquidity. There was not much trading happening in that contract. For example, if I look at ESM19, which is the current expiration date for the S&P, which is the June expiration date. Okay, you can see that here as well. Okay, June. Okay, remember June is the M. Okay. So, you know, it looks very, very, very nice, right? But if I drop to, let's say, a 5-minute time frame, and I was to load like a year of data. Okay, so let's load 1 year of data. Okay, and it may take just a little bit. And the moment is loaded, and now I'm gonna go back in time. So I'm just gonna drag the chart all the way to the left, and those candles look good, everything is good, but now look at what's happening now. Look at all these spaces on the chart where I am now missing candles, and you know, it's kind of like a mess. Why is that? Well, very simple, because in that date, okay, look down, that was February, okay, that was February. In February, people were not trading the June contract, people were trading the March contract. And therefore, there were very few trades running in the M symbol that represents June. Funnily enough, the M is not March, it's June. And this is something that you need to memorize, okay, guys? That's what it is. It's futures. So, and therefore, this symbol is not valid. So in futures, in case you didn't know that, it's very, very, very common that traders, instead of using the ES, it's very common that traders use the @ES. Okay, so instead of ESM19, very commonly, people would use the @ES. Again, @ES, it's with TradeStation. Okay, because if you were to use, you know, so @ES, that would be TradeStation. But if you were to use TradingView, as you saw before, it would be ES1 exclamation mark. If you were to use you know, Thinkorswim, for example, it would be /ES, right? So every platform will have its own way on how to do it. So again, know your symbols. But putting on the side and assuming that you know your symbols, which I'm counting on you to do that, okay? So talk to your brokers so you know your symbols. You have two ways on how to plot the symbols. The expiration specific symbol, which is good for now, but if you look left and you look too far left, everything gets distorted because no one was trading that contract on that date. For example, in February, no one is trading the M. Okay, people were trading the edge because the edge was March, but the M is June, right? Where the continuous symbol, it's great in the sense, okay, it's great in the sense that the continuous symbol, it's basically showing you out of the contracts with the greatest liquidity, it's kind of like merging them together next to each other, creating a one infinite contract that never expires, one infinite chart that never expires, even though that one chart is made of multiple contracts that each of those contracts have expiration dates. But you are kind of putting them all together, attaching them all together, creating this infinite contract that never expires. Okay, it's just a convenient chart for you to chart, because now notice how if I go back in time, very far in time, I don't know what date is that now. Now I'm talking about July last year. Look at that. Candles look just as neat as in the current date. Okay, and you always have this proper market data. Okay, so if you think about what I just said, okay, that we have contract specific symbols and that we have the continuous symbols, and you link this concept to common time frames and edge time frames, right? And by the way, I have a question coming for you guys. Be ready to answer. So if we said that we want the common time frame to be the one that most people use, okay? So question, for the common time frame, what would be the ideal symbol to be used? The continuous symbol or the one that is specific to the expiration date? Which one is the one that we should use for the common time frame? What would you guys say? That's a question for you guys. The continuous, very good. Very good, the continuous, because remember, everybody is looking at the continuous. Even the people that don't trade are looking at the continuous, right? Also, remember, when we use the common time frame, right, which in our case here is the 15-minute time frame, in this particular case, what are we doing with that time frame? Well, we are plotting a moving average. And an average, as the name suggests, is an average calculation that takes multiple data points from the past. So what happens is that we just learn that the continuous symbol, may have distorted data on the left. So what is the ideal symbol to plot a moving average? Is the continuous. Why? Because number one, most people look at the continuous. Second, an average needs data from the left and you don't want it to be distorted. So what would be the ideal symbol for our common time frame with futures? The continuous symbol. What would be the ideal symbol for us to trade with an edge time frame? Well, I guess you are thinking about it already, right? It would be the specific symbol that depends on the expiration date, such as ESM19 in current date. Everybody with me? Now, I believe what I said is if you never traded futures before, may get you thinking a little bit, but it's quite simple in the end. But at the same time, I'm asking you to do multiple steps here. I'm asking you to look at the continuous, then execute on the expiration specific symbol, and this is a little confusing for most traders. And even if it's not confusing, having multiple steps like that increases the probability of making a mistake. So good news, TradeStation knows how to do something which is a mix. Okay, and it would look like that. If you were to pick the expiration symbol, which is ESM19, and you were to add, let me say that again, you were to add the at the beginning, you now end up with a symbol which is continue, but also a symbol that is tradable, right? Because look, with the ES, okay, take a look at this. If on my matrix on the right, I load add ES, and I try to place an order, it says invalid future symbol. Why? Because add ES, it's an incomplete symbol. It's a charting symbol, but it's not a trading symbol. You cannot place an order in a continuous contract symbol because a continued contract, it's a made-up visual representation out of putting together multiple contracts that do have expiration date each, right? So you cannot trade a continuous symbol. So if you try to place an order with a continuous symbol, you get this error message. So now, if instead of this symbol, I was to use at ES M19, okay, which I have it now on my matrix on the right, I could certainly have it on my chart as well. Okay, at ESM M19. Well, if you pay close attention, as my TradeStation loads, okay, so at ESM19, okay, is showing me the same value. Let's pick a daily time frame, for example. So I'm looking at the daily time frame. It's showing me 2912.5, 62.03. That's the probability. If I switch to @ES without the M19, it gives me 62.03 and 2912.5. So I get exactly the same thing. So for charting purposes, @ES, which is the classical way to use a continuous symbol, if you were to add M19 at the end, @ES M19, you end up with a very same continuous symbol that in one hand, in the upper part, if I use a 2-minute time frame, for example, is giving me the detail I need for my edge time frame. In the bottom part, it's also giving me the common approach I need for the common time frame, where because the @ES M19 is exactly the same as the @ES, which is what everybody uses. But on top of that, when I'm looking at the matrix where I execute trades, if I was to click to buy, okay, notice how now it does enter my order. It didn't give me an error message. The order went in, and I cannot even see it on the chart. In other words, TradeStation, okay, and again, other platforms have similar features. Just know your platforms. In this case, I am demonstrating with TradeStation, but I mean, TradingView, I cannot demonstrate execution because TradingView is not designed for execution. So with TradeStation, I'm demonstrating both the charting and the execution. But basically, with TradeStation, you have the possibility to use @ES M19, and that allows you to produce those continuous symbols. But because you got the ES M19 at the end, actually that symbol is also understood by TradeStation as a trading symbol. And now, by using that symbol, only one symbol, even though with futures we have the continuous symbols and the expiration specific symbols, and we have all those different things. Well, in the end, with that one symbol only, you are ready to go. Is that making sense? You don't need to make it more complicated. Okay, so you can just use that symbol for everything you do, and now you can execute with that symbol, you can chart with that symbol, you got the continuous below for the moving average, and you got the contract specific above, with the edge time frame for you to execute. Okay, so that's the type of symbol that we're gonna use. Starting from now on, every time we do futures trading, we're gonna be using the symbols the way I used to do in all those Tuesday sessions where we have been doing get together for short-term trading, and you have seen me use ES M19. Starting from now on, I'm gonna add the @ okay? Could not do it before because we didn't have this conversation, but now we're spending time sharpening. So now, starting from now on, we're gonna be able to do it. Now, even though I just said what we're gonna do, I want to add one more step because, I know that some of you have also seen things such as @ES equal 107 XN. Okay, some of you may have seen symbols like that, @ES equal 107 XN. Okay, and if you were to use symbology like that, it's not a problem. You cannot trade that symbol. @ES equal 107 XN, you cannot trade. So you can chart, but you cannot trade. So if I place here with the matrix, @ES equal 107 XN, and I load that symbol in the matrix, you can see it here. Okay, I try to place an order, and I get an error message, such as the same as before. So that symbol cannot be traded. Could you do this? Could you do a mix and end up with a symbol @ES M19 equal 107 XN? Yes, you could. Is that symbol tradable? Yes. That symbol is tradable. Okay, that symbol is tradable. So if I was to go for @ES M19 equal 107 XN, and I click buy, then TradeStation allows me to place an order, as you can see. So you could do that. Okay, but I'm bringing this to the attention not to make this conversation complicated, but I just want to talk about oh, sorry for that. I just want to talk about the suffix here at the end, the equal 107xn, that some of you may be using. Okay, and I want to talk about if this is useful or this is not useful. Well, first, let's use common sense. And after using common sense, let's look at the stats, okay, to see what the stats suggest. So first of all, one of the timeframes we want to use is the common timeframe. With the common timeframe, what you want to see is what most people see. And what do you think most people see? The equal 107xn or the at ES without the equal 107xn? Well, I think it's pretty clear. A very, very small minority uses 107xn. So adding at the end equal 107xn is not going to help you when it comes to the bottom time frame, which is the common time frame. Would 107xn help you with the edge time frame? Well, it would not help you either, because the edge time frame, if you were to be purist, you would just type ESM19, right? So if you're going to type ESM19, or you're going to type ESM19, let me say that again. If you're going to type ESM19, or you're going to type at ESM19 equal 107xn, you're going to get the same thing. The data on the left will not be the same if you add 107xn, but the data on the right will be exactly the same with or without 107xn. So in other words, adding 107xn is not going to help the common time frame, is not going to help the edge time frame either. But let's look at the stats. Okay, so let's go ahead and load one year. Let's load 1 year of at ES in the 2-minute time frame. So if I do at ES in the 2-minute time frame and I load 1 year of data out of all the green and red UFOs that were formed, let's see what the performance is going to be. Daniels, if you have a blurry screen, use your mouse in the bottom part of your YouTube. There is a little wheel that will allow you to change the settings. And from there, you need to use or select HD. Okay, so because I am streaming HD, 1080 HD. So if you are not receiving 1080 HD, it's because you need to change the settings on your side. Okay, so take a look at that. If you do at ES 2 minutes, you get 6796. Okay, so everybody keep that number in mind. I got 1 year of data. If instead of at ES, I was to do at ES M19, 1 year, well, guess what? I'm going to get exactly the same because we agreed at ES and at ES M19 is the same. The only thing is that now authorization allows you to execute, but it's the same. So we should get 6796. So let's see. So we are just waiting. And if the data is the same, we should get the same, which is 6796. And again, I'm doing this out of building your confidence, guys, okay? Because I could just state it and that's it, but I just want you to see it, okay? So you don't get distracted by noise, okay? When exposed to certain market information. You focus on what's going to work for you, okay? So 6796 is what you get with the ATS or ATES M19. In other words, ATS and ATES M19 is the same. So I repeated myself a few times now, okay? But what if you do ATES equal 107xn or ATES M19 equal 107xn, which is the same? Well, if the 107xn was to help you, you will get more than 67, right? So let's see if you get more than 67 or less than 67. So we're waiting. Okay, just a little more patient. Of course, it's downloading a lot of data for a whole year and stuff. So 67.98. So in the 2-minute time frame, instead of 67.96, you got 67.98. So basically, it's about the same, right? But what if you do it with a larger time frame? So if I do it with a, let's say, a 4-hour time frame, right? So 4-hour time frame. Let's load a 1 year of data just to have a nice sample. 1 year of data, 4-hour time frame at ES equal 107xn. Okay. It's 5504. Okay, 5504. But what if instead of at ES equal 107xn, I just do at ES, or I do at ES M19, which is the same as at ES? So what will happen if you do that? Well, it's 5598. So you can see that adding or not adding 107xn, it's about the same. Or actually, you could argue and say, okay, without the 107xn is actually better. It's better by just a little tiny bit, which makes it that it's not even important to add it or not to add it. Is whatever you prefer. But in the end, if he's not adding, what would you make your life complicated? Okay, so that's my little point here. And therefore, starting from now on, every time we are doing short-term trading, you will see me use at ES M19. Why? Because with at ES M19, or if it's the NASDAQ, at NQ M19, or if it's the Euro futures, at EC M19, etc. With that symbol, I am killing multiple birds in one stone. I can execute using that type of a symbol with TradeStation. I can get my continuous data, and therefore the data on the left of the chart will not get distorted no matter when. I am looking at what everybody looks when it's the common time frame, and then I am just as precise as using the expiration specific symbol when using the edge time frame. So what am I suggesting you to use, guys? At ES M19. This type of nomenclature is the one I will suggest with TradeStation when trading. Of course, if you are not trading, you are just doing market analysis, you can just go ahead. Okay, you can just go ahead and use the ATS, okay? Or if you're using TradingView, you are not going to execute with TradingView, but for charting purposes, you would use you would use ES1 exclamation mark. So this is the type of symbols that we're going to use when doing futures trading. Okay, guys? So ATS M19, which is the same as ATS, or ES1 exclamation mark. Okay, that would be the type of symbology that we're going to use. Again, I wanted to go over all of this. To some of you, maybe that was a little in the boring side, because some of you may know about all of this already. But just in case, I want to make sure we all speak the same language. So starting from now on, if you were to use endings such as equal 107xn, equal 1 whatever xn, or you were to use specific symbols instead of continuous because you like specific better than continuous, or it's all fine. We are just speaking the same language. But out of convenience and killing multiple birds on one stone, I will be using ATS M19. Okay, guys? So hopefully everybody with me on that. So let me look at your comments before I keep going, because now we need to look into the time frames. Now we know the symbols. Now we can talk about time frames. So, John, you're asking about the 1.7, so I think I made my point. Can I ask, how do we get order lives on chart? Oh, yes, of course. You just, Subhash, you just right-click, format, account, order, and positions. And when you do that, you just make sure that your data is activated. In the data section, you link it to the right account with the account button. And then in the settings, you just click on whatever you want to show. Okay, so you can display position arrows or not to display, open orders, queued orders, all that stuff could be activated or deactivated based on your preference. Okay, so that's where it is. Right click, format, account, orders, and positions. What else do we have? Ahmed, I have the same question. Am I trying to get the orders on my chart and it did not work? Okay, so you guys just saw it. Yes, you perfectly fine there if you want to use at ES M19 equal 107xn. just typing a little more, that's all, and the difference is going to be basically nothing. Okay, so you basically lose close to 1% probability by doing that, okay, which is the same as doing nothing, you know what I mean? So 1% up, 1% down is the same. The .d, okay, the .d, that's a different story, because with the .d subhash you are hiding data, okay? The .d symbol in TradeStation only shows you regular trading hours, okay, not pre and post market. So we will not go that route, okay? John, OTA teaches it. Yeah, but yeah, I get you, John. But again, remember, in the methodology we are going through, I mean, one thing is that you are looking at a market, and the market is reaching, for the first time in the history, is reaching some territory. And maybe you change the format of the symbol and you get something on the left, and now you can do some prediction. So I would totally get doing that. But remember, in the methodology we are doing, first of all, we are not talking about reaching a place in the chart that the market has never been before. We're talking about intraday trading, which means that every single day we're going to execute multiple trades. And second, we are going to be trading in the right side of the market, which means in the side of the trend. And when you trade in the direction of the trend, give me a second, guys, please. Sorry, guys, I just had a little itchy throat. So when you trade in the direction of the trend, you know, most of your data is going to be, you know, right there on the left, very close by, because you are trading in the direction of the trend. So you don't need to go the route of being too fancy with your symbols, especially when you see the probabilities don't create any impact. Okay. And by the way, just feel free to play with the stats yourself. Okay. And that will basically tell you what to do. So, let me see. Very good. Very good. Perfect. Okay. And for the people like Maka, for example, you make a comment, I'm new to futures. So in my mind, probably this symbol explanation probably has been a little quick, okay, if that's the case, okay? So feel free to review the recording, etc., etc. You can even take a look at the CME website, cmegroup.com. There is a lot of educational content about symbols and stuff. Maybe you want to watch all those documents and watch their videos and then come back and listen to what we discussed today, okay? But again, my point, my plan for you guys, that's what I do for myself, is to try to find this balance into doing stuff that is subtle and matters, but at the same time keep my life simple. Okay, that's the idea. Okay, that's the idea. Okay, so not to overcomplicate. That's the idea. Yeah, Ellen, UFO will not be showing probability on the trading view. On trading view, the way you will be doing the calibration, which we could talk a little bit about that at the end of the session as well, it's by doing market replay. Okay, the technology behind TradingView and TradeStation is different. With TradeStation, we can have many things on the screen, text, you know, circles, all sort of stuff. TradingView has certain limitations with displaying stuff on the screen. You also see TradingView got the UFO bands go all the way to the left, right, instead of stopping there. So it's the look and feel of the tool is different, even though the algo running behind the scenes is the same. Okay, so but yes, you're right. The probability will not show with TradingView. You don't have that 6793. There is no way to show that on TradingView. Okay, it does show on TradeStation though. Good. Anyway, so time frames. Okay, time frames. Okay, I know some of you are really waiting for the time frame conversation, but it's one step at a time, guys. You know, there are so many things that we need to discuss in a proper way. So we have the peace of mind that we are doing things well done. Okay, so. Guys, time frames. So we need to get deeper into the world of shared time frames and tick time frames. Okay, because like for example, let me see. So for example, right here, there's been a moment in time in that candle, right here, that candle here, where, you know, that market came here. We go, and you know, maybe, you know, if you had a green UFO at that time, you would have bought. Okay, at that time you didn't have a green UFO, so you would have not. But let's say that sometime in the past, I'm just gonna make up a little scenario here just so I can give you an explanation. Let's say that sometime in the past, okay, I'm using the wrong tool here. Here we go now. So let's say sometime in the past, you had a UFO right here, okay, with a UFO band, something like this, okay, and the price came into the UFO at this moment in time, okay, at this very moment in time, the price came into this UFO, and let's say that coincided with this moment in time where you're basically getting to where the average is, okay, and therefore, you know, you decide to get into this trade to potentially profit from the market going up. Okay, so let's say that was the entry that you had. Okay, so this is what we have been doing multiple times on Tuesdays. I know some of you have been implementing this methodology for yourself. I know some of you are quite happy actually, and that makes me happy too, by the way. Okay, but the idea is to fine tune, go deeper. Okay. Get a more edge, be more precise. You know, all those things that we said, we started saying last Sunday, right? So how can I get more precise there? Well, one way to get more precise is to, instead of a 2-minute time frame, maybe I'm going to use a 15-second time frame. I could do that. So let me load a 15-second time frame. Okay, here's my 15-second time frame. Now, what's the problem? I mean, how do you feel about reading those candles? Can you read anything here, or is just noise on top of noise? Is that making sense? Why? Because really, you know, if you, and this happens to everything in life, you know, if you zoom in too much, there is a moment in time where you get to the noise, right? And it's all because on how you observe it. Depending on the tool that you use to observe, you get to see noise or you don't see noise. For example, if you were to use a normal microscope and you are looking at tissue and you start zooming in with a microscope, you get to see the cells. But if you start zooming in, there is a moment in time where it's all distorted, and you know, if you had the proper tool, you would get to see the DNA, you know, the DNA and everything and all the detail. You can even get as deep as being able to see atoms and protons and neutrons and electrons. You could get that deep, but not with a microscope. Why? Because the microscope, you know, allows you to zoom in up to a certain point, but beyond that point, you need other tools that allow you to be much more precise. So in trading, it's kind of the same. If you are using charts which are based on time, for example, 2 minutes, okay, and for you to zoom in, you use the same sort of tool, which is time, and you go from 2 minutes to 1 minute. And you go from 1 minute to 30 seconds and 50 seconds and 10 seconds and 5 seconds, yeah, you are zooming in, but you are getting distortion, you are getting noise. So what is the way, how can you, that's the question, how can you zoom in, get a better precision, a better understanding of those on-field orders without getting the distortion, right? That's when, last Sunday, I got you introduced to other types of time frames, such as share bars and tick charts. And the reason why those time frames will not give you distortion, I mean, they could certainly give you distortion too. If you use a 5-share bar, you know, 5 shares per candle, okay, well, that's totally distorted as well. You guys see that? It's totally distorted too. Why? Because again, you are zooming in too much. You change to a tool that gives you more precision, which is the share bars instead of time-based charts. Okay, so it gives you more precision, but again, if you zoom too much, you get the distortion again. So what you want to zoom in up to a certain level, knowing that with the tick charts and the share bars, one thing that we will be able to accomplish is to get more detail of the information presented on a chart. And more detail means more precision, and more precision means less risk. We're going to be able to get more detail without getting the distortion. Okay, so for example, here's a 5,000 share bars, right? Here's a 1,000 share bars. Okay, and you know, all those time frames are looking good, and you can certainly trade them. Okay, and now you know, you have plenty of data on the screen that can make you very precise. But still, I got a problem. Okay. And what's my problem? I don't mean to make anything complicated, guys. I'm just saying I do have a problem. Take a look. If I take a look at the volume of those different products. So let me add. Okay, here we go. Volume average to my radar screen. So if I add volume average, okay, and okay, I'm gonna have to change the color because obviously yellow on white doesn't show well. So let me get volume average, we'll make it black color. So take a look at the volume average column, okay? So focus on the volume average column. So for example, the ES, which is the S&P 500 futures, that product produces, as an average, okay, which doesn't mean it's every day, it's an average, produces 1.3 million contracts traded per day, where the NASDAQ produces like 25% of that. That's 400,000 contracts traded per day, where the Russell, it's 100,000 contracts per day, where the Euro is 169,000, right? So what does that mean? Well, think about it. If I was to use the 5-minute time frame applied to the S&P, and I was to use the same 5-minute time frame applied to the NASDAQ NQM19, okay, guess what? No matter the amount of trading activity that those two charts have, 5 minutes, it's 5 minutes, okay? No matter the amount of trading activity, the liquidity, the amount of trading participants, how many trades came in today, no matter any of that, 5 minutes is 5 minutes for both markets, and 5 minutes represent the same amount of time for both markets. In other words, if I choose to use the 5 minutes or the 2 minutes, I don't need to think beyond that, because 2 minutes is 2 minutes for all markets, 5 minutes is 5 minutes for all markets, no matter the market. But if I'm going to open the door to go deeper when it comes to my precision and my detail and zoom in, well, it's not the same to use a 5,000 share bars on the NASDAQ compared to using a 5,000 share bar on the S&P. Why? Because we said that with the S&P, okay, take a look at this. So with the S&P, we got 1.3 million contracts. So 1361791 divided by 414326, okay, is like 3 times more volume on the S&P compared to the NASDAQ. Okay, so if I'm going to use the 5,000 share bars in the NASDAQ and I want to do something equivalent with the S&P, I would need to use something which is about 16,000 share bars on the S&P. In other words, if I switch symbol to add ESM19 instead of NQM19, I do add ESM19, and I switch, and now, as you can see, as you will see, we're going to get the 5,000 share bar. I would not be able to call this equivalent to what I just had in the NASDAQ. If I wanted to be equivalent, I would need to change that to something around 16,500 share bars, because 16,500, it's more or less 3 times more than 5,000, which I was using for the NASDAQ. And now I would have more or less equivalent timeframes. So what am I telling you here, guys? Okay, I mean, a minute ago I told you that, you know, I want to help you to simplify stuff, and really I'm making your life quite complicated now by telling you that now we're going to use share bars, but on top of that, every symbol will use a different set of time frame, you know, to do that. And it gets worse. I mean, the end of the story is going to be a happy one, guys. I'm going to give you a solution for all of this, okay? But as you understand the problematic situation that we have in front of us here, I was saying it gets worse because the liquidity that you will find in those products changes through times. So right now, the S&P is showing like 3 times more volume than the Nasdaq. But there will be times where it'll be 4 times more volume than the Nasdaq. It'll be times where it'll be 2.5 times more volume than the Nasdaq. It'll be times where the crude oil will be very, very, very liquid. It will be times where the gold will be very, very liquid. It'll be times where the gold receives little volume. So all those volume parameters keep changing. Time doesn't change. 5 minutes, 2 minutes is always 5 minutes, 2 minutes. But the volume, the amount of trade, the amount of trades, the volume traded does change through time. And then the question is, so how do you deal with the time frames if you want to get more precise and have an edge with the edge time frame? So the question is, which time frame should I use? Okay, so I'm going to teach you a method for you to be able to know how to pick the right time frame. And we'll have to call it a day because we've been here for like close to 2 hours now. And as a homework for this week, I would like to ask you all to play with the time frames and the method I'm about to teach you before we conclude the day. And then we'll talk about it next week. We'll keep going because, again, we are building a complete process and methodology on how to trade. And guys, it's going to be quite simple in the end. But as we are building the methodology, you know, there are multiple pieces of the puzzle that I want you to understand. I want you to experience. And because this is teamwork, yeah, certain things I need to quiz you a little bit as well, and that's why I'm going to give you a little bit of homework too. Okay, so that way you guys can internalize it, and you know, little by little you are defining your roles. As I am giving you the generic rules, you will be defining your specific rules in your plan, because in the end, not all of us are going to be trading the same markets, the same time of the day, etc., etc. Okay, so how would you, you know, knowing that by default, if you do 15 minutes for common, you should do 2 for edge. How would you convert the 2-minute time frame into a short time frame or a tick time frame that is equivalent? Okay, that is equivalent, knowing that volume and all those things change, you know, through time. And again, on top of that, you want to do it in a way that produces an edge. Okay, how are we going to do that? Well, remember, anyone remembers 2, 8, and 21? I asked you this question the other day. 2, 8, and 21 are what? What type of numbers are those? Yes, you will see, Maka. I mean, I get your point. You know, it's gonna, you'll see what we mean by edge. We'll get there. Fibs, exactly. So guys, again, if you recall what I said the other day, Fibs is not like Fibs is magic or anything like that. But why it may be useful? Well, it may be useful because there are many computers out there owned by big players, big institutions, hedge funds, etc., that are doing a lot of trading out of Fib numbers. And guess what? That is also utilized for time frames. Okay, and that's why we picked the 2, the 8, and the 21. But this also applies to the volume and the ticks. Okay, so I want to make a list here. Okay, just so we have it in front of us. I want to make a list of Fibonacci numbers. Okay, I want to start with something like, you know, 21, 34, 55, 89, 144, 233, 377, 610, 987, 1597, 2584, 4181, 6765. Okay, I'll stop here. So all of these are Fib numbers. Okay, so let's say you decided to trade the S&P here, S&P futures, using the 15-minute time frame and the 2-minute time frame as an edge. So you have the 2-minute time frame is your edge time frame, the 15-minute time frame is your common time frame. Okay, and Maka, strong recommendation for you, please go ahead and watch last Sunday session, because we talk about edge, even though I'll take it to the next level, but I want to make sure that you also understand what I said last week. Now, let's say you wanted to use 2, but you want to take the 2-minute time frame and convert it into a volume time frame, also known as share time frame, or an activity time frame, also known as tick time frame. And you want it to be one of those fib numbers, okay? And the reason why is because you want to find your on-field orders in the same place where institutions got their on-field orders. And institutions use fib timeframes, and that's why you want to use fib numbers too, okay? And also, the other reason to use fib numbers is because if I don't give you rules using fibs, you may have too many choices, because if I give you those choices, those are your choices. If I don't give you fib numbers, then you can pick 300, 305, 310, 320, 325. You have infinite choices, and infinite is too much. So I want to limit your choices and give you a way to have choices for timeframes which are aligned with what the institutions do, so it gives you an edge. Okay, so we're gonna go for those. And what are we gonna do? Well, I'm gonna zoom in, and to pick your time frames, I would like you to use a quantity of data which is relevant, okay? And relevant, in my mind, is 1 year. You can certainly use less than that. You can certainly use more than that. But if you use 1 year, you know, normally you would be fine, okay? Sorry. Let me rephrase that. 1 day, not 1 year, because we're doing it's 2 minute time frame. You got many 2 minute candles in 1 day. Sorry for that. I meant 1 day. So I'm loading a 1 day data on the 2 minute time frame. This brings me all the way to here, which is 412. All those candles on the right are 1 day of trading. And what I'm gonna do with that 1 day of trading is I am going to insert a very slow moving oscillator known as RSI, which stands for Relative Strength Index. And really, this is not important. What's important about the RSI is it's an oscillator. And an oscillator tells you when something is overbought and when something is oversold. And it keeps going up and down between overbought and oversold. And RSI is very slow. So basically, it's giving you quite extreme conditions for overbought and oversold. So what I'm doing is I'm adding RSI in the bottom part of my 2 minute time frame, and when I do that, I come up with this thing on the bottom part, and what I'm going to do is count how many times I got the blue and how many times I got the red in the 2 minute time frame in that 1 day. And here it's 1, and then 2, and then 3, because I got gray in between, and then 4, and then I got gray in between. So that's 5, and then 6, and then 7, and then 8, and then 9. If you look closely, there was a little gray between. 9, and this is 10, and 11, and 12. So what did I accomplish? Well, I have identified 12 extreme conditions for that market going up and down, based on this mathematical calculation that RSI does that we don't even need to know, in the 2 minute time frame. So the number I got is 12. So what would I want to do to come up with an equivalent time frame, which is shares or ticks? I would want to get more or less 12 of those things. So for example, what if I use the 4181? So if I use 4181 shares, okay, I get, oh, sorry for that, I get 1 and 2 and 3 and 4 and 5 and 6 and 7 and 8 and 9, which is less than 12. So what will you do? You will go for the prior one, 2584. If I do 2584, now probably I got more than 12, and I'll be fine with that. So I got 1, 2, and 3. I got 3 there, and 4, and 5, and 6, and 7, and 8, and 9, and 10, and 11, and 12, and 13, and 14, and 15, and 16. Here we go. Oh, that was very big. So I got 16, okay? Which, again, I'm not going to be able to have exactly 12, okay? But I just want to be 12 or above, okay? So what's happening now? Well, notice that now I came up with a shared time frame that is more or less equivalent to the 2-minute time frame. And I'm calling it more or less equivalent because the price movement produced in this time frame during a one full day of data produces more or less the same amount of extreme conditions up and down measured by the RSI indicator on the bottom part of my screen. And therefore I could say that in the case of the S&P, okay, ES, okay, we have that the 2-minute time frame is equal to 2,584 shares. Okay, and then we need to look at what about ticks. Okay, but which I'm going to do it right now. But notice the advantage, and this is one step in getting more precise. Okay, we'll have more steps, but notice one advantage. If I do the 2-minute time frame, I get 67%. If I do the 2584 shares, okay, 2584 shares, I don't get 67, I got 78. You guys see this? So what is this doing? It's getting you more precise. And why is it getting you more precise? Well, because it's a share bar, where every candle has the same weight no matter the time of the day. Why? Because every candle is made of the same amount of volume, which is 2,584 contracts per candle. Okay? On top of that, this is a time frame I'm telling you institutions use in their algos because it's a FIB time frame. So you are finding on-field orders in places where you have a higher probability that those on-field orders are institutional instead of on-field orders that belong to someone else that is not that big. That's why you got 78 instead of 67. So what you could do now is to apply the same thing we've been doing every single Tuesday with the 15 and the 2-minute, but now you would do 15 and 2584. What's the challenge? Well, the challenge is that now, if I switch to the NASDAQ, I could not use the 2,584. Or maybe yes. Probably not, but maybe yes. We don't know. So how do? You will need to do the same process again. Activate RSI. Take a look at 1 day. Wait a minute. Let me double check. I got 1 day of data here. So 1 day. Here we go. And I'm going to move to 412. More or less here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So I got 20. Okay, so let's go for it. So we're looking for 20, 2584. Right? Let's see with the NASDAQ. What are we going to get? The 2-minute is going to be equivalent to, we'll see how many shares. We are looking for 20 extreme conditions. We got, since 412, we got 1, 2, 3, 4, 5. So definitely not enough. So what am I going to do? I'm going to drop to 1597. Okay, 1597, which is the next Fibonacci time frame, is going to be 1, 2, 3, 4, 5. Not enough. What is the next one? 987. And this is going to be 1, 2, 3, 4, 5, 6, 7, 8, 9. Not enough. What about 610? So with the 610, 1 day. One day. Okay, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16, that's it, 16. The next time frame would be 377. I'm looking for 20 or more. We didn't get 20, so I guess it's gonna be this one. Okay, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. Here we go. So we got 25. We were looking for 20. Of course, we cannot be exactly 20. So that will be the time frame that we will use. Okay, 377 share bars. That's the one we will use with the Nasdaq. So notice the difference on the time frame. So the challenge here is that for every market you need to remember what are the time frames. And this, by the way, it's something that, you know, I mean, it's not like this is going to change too often, but it will not hurt you to maybe revisit this. Let's say every 6 months you kind of redo it, just in case a market is really changing the amount of participants, and the market is becoming so much more liquid or so much less liquid, and you know, you may change those inputs, right? But basically, you know, this, you can use this for a while and you are fine. But the other thing that we need to do is, what about the ticks, right? Because, you know, what is better for you to use? Okay, what is better for you to use? The share bars or the tick charts? Because you know, both got the same advantage, but both got a question mark. The same advantage with the share bars and the tick charts is that you have the same amount of trading per bar. It's not related to time. But share bars measure it in the form of contracts per bar, where ticks measure it in the form of trades per bar. So what's better? And basically that depends on the market. Every market may be different. Just like when you have seen me on the Thursday sessions that sometimes I show you pre and post market data. And there are some stocks that got fantastic statistics pre and post market, and some stocks where you can see that statistics pre and post market are terrible, which means that institutions cancel the orders. It's kind of the same thing here. They are markets traded by institutions in ways where they place big, large orders, where other institutions place smaller orders, right? And so you don't never know what's going to be better, the share bars or the tick charts. You need to rely on some statistical measurement to find out what's going to be best for you. Okay, so you have to run the stats, and these may be changing through time, right? There may be 6 months of a year where the share bars were better for the S&P than the tick charts, but then the second part of the years, the tick charts actually perform better than the share bar. So what do? Well, you know, again, from now and then, let's say once a month, you revisit the stats to see what's going on. It's not critical for you to look into it too often, because yes, you're finding on-field orders, so you're going to be fine. But if you were to review it from time to time, it would put you in a better position to reach a better level of performance and efficiency. So let's take a look. For example, in the 2-minute time frame, we had with the Nasdaq, we were looking for 20 of those cases, right? With the share charts, we ended up with 377 bars is the number to use. So what if I use 377 ticks instead of shares? Okay, how many of those things I get? I get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So the 377 is almost there, but it's not good. So what if I use the 233 tick? If I use the 233 tick, which is the next fib number, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, and 22, 23, 24, 25, 26, 27, 28, 29, 30. Right? So that would be the one. That's giving me 20 or more. So 233 would be the equivalent tick time frame for the Nasdaq. Now, here's when you look at performance. If I load 1 day of data, and actually to do this, that's when you want to load 1 year. If I was to load 1 year of data with the ticks, And by the way, that's going to be crazy amount of data. So it may take a while. So PD on the left. So when this concludes, okay, we will get a performance metric. Okay, 6732 will be something else. I'm gonna try to work in parallel just to save a little time, because I am way past the time for me to conclude the session. But I just wanna give you these guys so you can practice during the week yourselves. Okay. Okay, so it's a lot of downloading data from my TradeStation now. We'll just wait. Let me see your comments. Hey, Andrea, thank you so much for your comment. Yeah, David, again, I get your point when you say I prefer shares since it's obviously related to volume. I get that. But sometimes, you would see ticks performing better. And why is that? It's just because on how those markets are traded by the big players. And, let's say some big institution is very heavy on trading the NASDAQ, and they are doing it in ways where their algos create very big orders instead of small orders many times. So then maybe the ticks would work better than the shares, or vice versa. And these may change. So yeah, Brent, the way the probability is calculated has to do with how often prices bounces from green and reaches red, or how often prices reaches red and bounces and reaches the opposing green. Okay, so how often price travels from red to green, or green to red. That's it. Yeah, Ahmed, to be honest, the range charts that you're talking about the ones with TradingView, right? If you are talking about those, I have to be very, very transparent. I mean, like I am always, but in this case, I need to point at something I don't know, and I don't mind to say it. So I never use the range chart with TradingView, and therefore I will not be fully comfortable giving you any sort of instruction. Because I don't have experience with them myself. So, maybe if you give me a little time, I'll do a little research and get to understand that better, and I'll be certainly happy to talk about it. But at this moment in time, the way TradingView deals with range charts, I am not well informed, not informed enough to be able to answer that question. Okay. Okay, this is taking really, really long time, which is normal because I have loaded a lot of data here. Yeah, I'm just trying to see my download scheduler. Yeah, it's downloading all the ticks. So let's do this, just to save a little time to conclude the session. Okay, so I'm just gonna load. Yep. Okay, so with whatever amount of data I got by default, which is 1,500 bars, okay, you will want to do this for a whole year if you want to do this properly done. Again, we do this once every 6 months if you wish, okay, so you could certainly afford the waiting time. I'm just gonna do it like this, not to keep you waiting. But basically, notice how the 236 tick give you 67%, where the 377 give you 67%. So we are talking about more or less the same thing. Okay, in this case, there is not a massive difference, so you would just pick whatever you want, and that's it. Okay, but there would be times where you may have a greater difference. Okay, and then you would only use ticks or only use shares. Okay, only use shares. So with the S&P, okay, so if I load at ESM19 and we go for the ticks, So we're going to be looking for, we have for the S&P 2584. So if I start with 1597, okay, so we have 1, 2, 3, 4, 5, 6. That's not enough. So if I use the 610, let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. And I believe it was, we were looking for 19 with the S&P. So it seems that 610 would do. Okay, so the equivalent time frame for the S&P is 610 ticks or 25,084 shares. And again, same story as before. If I load, let me see the amount of bars. I got 1,587 bars. You will want to make it 1 year. I'm not going to do it to not to wait time. If I were to load 2584, so we are talking about, in the same amount of data, the tick time frame is giving us 78, where the share time frame, oh sorry, that's NQ, guys. I'm like, this is not possible. Yes, here we go. So 78.89, 78.83, which it's kind of another way to kind of confirm that you are kind of doing the same thing, isn't it? But even though you are kind of doing something, notice how, you will find on-field orders in different places too. Okay? So, of course, depending on the data that you process on your screen, you will get a little bit of a different feel. So now you have a few choices in front of you. And next week I will add more. Okay? And I will give you a bunch of choices, and then we'll pack them into categories to end up with 3 key ways on how to apply all of this. Okay? But the choices that you have at the moment is, you either use the 2-minute combined with the 15, or you use the 2784 combined with the 15, or you use the 610 ticks combined with the 15. Okay? Or with the NASDAQ, you use the 15-minute time frame combined with the 2, or you use the 15-minute time frame combined with the 377 shares or the 233 ticks. Okay? And those are the possibilities that you have in front of you right now. And you can either use only one of those possibilities or combine them all. Like, for example, if you got the 15 and the 2 giving you a trade, you take the trade. But if you also give the 15 and the 2584 giving you a trade, even though the 2-minute time frame is not giving you a trade, you still take the trade. Or if you got the 15-minute time frame with the average giving you a trade, together with the 610 ticks giving you a trade, you take the trade, even though the 2-minute and the 2584 doesn't give you a trade. So in other words, as long as the 15 tells you take the trade, and either the 2-minute time frame or the 2584 share time frame or the 610 tick time frame give you the trade with the UFOs, you take the trade. That's option number 1. Option number 2 is that you need at least 2 of those, right, to align. For example, you have the 2-minute time frame green UFO, and you also have a 610 tick time frame green UFO, and you have them all lining up, and then you take the trade. So again, you could combine those things in ways to make yourself pickier and trade less often, or make yourself less picky, less selective, and trade more often, knowing that all of it would make sense because all of it gives you an edge. So it all depends on how precise you want to be, on how perfectionist you want to be, and therefore how active you want to trade. You want to trade very often, or you want to trade a few times only. Okay? Again, we need to conclude the session, guys. Okay? I mean, I could keep going for 2 more hours, believe me. But we need to conclude the session because, we've been running for 2 hours and a half. So that I think that's good enough. Homework, just to get organized. Practice this. Get your time frames, get the RSIs, practice these, play with the time frames. I'm sure you have questions. Send us emails, rich@tradewithufos.com. You'll get answers. And then next week we'll talk about this more. And most importantly, now that we know more about symbols, now that we know more about time frames, Then tomorrow we will continue our process and we will come up with rule number 2, which today we have not had time because we had many things to discuss. Okay, guys? So that's the plan. Let me take a quick last look to the comments box. Yes, I hear you, well, Daniel. Because of the forex, we'll have no ticks and volume. Yep, I hear you. We'll talk about the 2. Keep going. I love you. I love it, guys. You guys have the same passion. I love it. Yeah, hearing you. Yeah, Andrea, I really appreciate when you say this is magic, but you all need to remember you are the magic person, okay? I'm just giving you some rules, but then you following the rule with disciplines. That's when you make magic, okay? So you are the magicians, guys, not me. Even though I appreciate you saying that. Very good. Okay, got it. Guys, one last comment here. What I'm teaching you here applies to everything. Forex, CFDs, stocks, futures, commodities, you name it. Okay, so we are building a process here. We are building a process. We're still in the beginning part of building the process. But again, with the information you received today, experience it, play with the RSIs, adjust time frames, see how it changes throughout the days. So we can talk about that next weekend as well, and so on. Okay, guys. Hey, super pleasure to spend these 2 hours plus with you guys. See you soon. Guys, on the YouTube channel, click subscribe and click on the little bell. Many of you are not. Make sure we're all connected because again, that way we can communicate more efficiently and you are notified when we start the sessions, all that stuff. Okay. See you next week, guys. Enjoy the remaining part of the weekend. Bye bye, everybody. Take care.